So, what a day, guys. I need to change the light of the studio because today is red, okay? Today is red. And what a day. And before we starting with the stream and explaining, what's happening, what my thoughts and feelings are, what about space, what about Tesla, what about the overall market, we will have a bounce back tomorrow, and so on and so forth. Before we diving into that, there will be two things, okay? First, make sure to let me know where you are watching from so I can give you a shout out. And then second, make sure to smash the like button for the stream. And I want to show you first a scene of one of my favorite movies about stocks and investing. It's called Margin Call. And there's one particular scene where the CEO or the chairman of the company arrives, and they are having to make the decision of to sell or what to do with the equities, right? With the junk bonds and junk that they have on their balance sheet. So it's a quite interesting scene, and I want to show it to you because it just fits like perfectly today. Okay, here we go. My favorite scenes of the whole movie because they are about to sell all of it, okay, because of the financial crisis hitting. Now, obviously, this is not to scare you guys, okay? This is just for entertainment purposes because we will dive into what is happening right now because it's very important that you listen very, very carefully because then you will have the chance to understand it and react accordingly, okay? I want to show you a tweet that actually summarizes it, okay? So as you know, every about 1 month, the Fed, not every month, but almost every month, I think 9 meetings they have over the year, the Fed is meeting with all the committee, and then they decide what they do with the monetary policy, right? They can adjust the QE, the money that they're pumping into the market. They can adjust the interest rates of the overall economy and so on and so forth. So lots and lots of depending what is happening in this meeting. So they had this press conference after the last meeting, and they, explained a little bit what they want to do and, 3 rate hikes and so on. And 1 month after, the report or the meeting report comes, the minutes of meeting basically, and then what's happening is that you get a little bit more of an understanding how they really feel about the economic situation, what they want to do, okay? And there's one tweet in the internet that summarized it actually very, very well, okay? So the summary of the Fed meetings is following. Number 1, mentioning of Omicron variant, okay? Second, double down on more rate hikes sooner rather than later. Number 3, inflation risk to be to the upside. 4, no mention of transitory inflation. Number 5, balance sheet could shrink faster than expected. And the most important parts here are number 2, that they actually will want to raise also in 2023. This is a kind of surprise. And that they will lower the balance sheet a little bit faster, or considering that to be faster than usual. This means that they are more bearish on the overall scenario, okay? Now, number 1 is basically already done, okay? We think by the 9th, so in strikes 3 days, the top of Omicron in the US should be reached. And from there, we know curves around the world are going crashing back down. Inflation risk are to the upside. Yeah, we know that already, but also that, this is now a report or a meeting report that is 1 month old. So we got a inflation data already. We seeing like a small top on the inflation data as well. So I think this is also which is important. Transitory inflation. I think they said it 2 months ago that they don't want to use it anymore. So all in all, we are having a report or a minutes of meeting that is 1 month old, with a lot of surprises that the market doesn't like. But also remember, all of this is just the thoughts that they have right now. If this situation changes, they will have another meeting in about, I think, 20 days where they meet again and maybe slow back a little bit, okay? Because the Fed is now in a position where they pumped so much money into the market that everything went up, inflation went up, and now they are having the problem, oh, now we should have done or considered the rate hikes a little bit earlier, and now we don't, they maybe do too much, okay? And this is the fear of the market. Is the Fed really here out of hand? But again, 1 month's report that can change any time. We are seeing that. And maybe one of the most important questions, guys. This things like the balance sheet shrinkage, the what else? The rate hikes, everything that is happening earliest March or mid of next or this year. Okay, so we still have 3 or 6 months until any of that comes to fruition. So you still have a little bit, it's a shocker, yes, market is a little bit overreacting, yes, but I believe that we still have a little bit of time for buying the dip. Okay, that's what I'm doing. Okay, guys, remember, this channel is and always be something that I document for myself as well. Okay, I'm sharing my thoughts. I'm loving your community. Your following is great. Your support is great. Obviously there is sometimes negative comments that you either address, but if it's not respectful or anything else like that, then it's obviously need to be handled with just blocking those users. So basically if those are with bad names or anything, so you need to stay positive, because investing is, especially for beginners, attached with a lot of emotions. Okay, so I think that this is important to really stay cool, and I'm always open for any discussions and teach a little bit what I know, and how I apply things to the markets. I also lost a little bit today because if you are in my Discord or followed me on Instagram, if not, make sure to do that, Wolf of Dubai, then you might have seen that I had a very nice Tesla calls that was up, I think, like 50%. And I was still holding those because I thought that, it's really great to, go with those into the earnings, which will happen in a couple of days. But then obviously the whole, almost the whole profit disappeared over the last 2 days. And I believe that we at least should have a little bit of bounce back. So I'm still a little bit holding it. There was not so crazy that it's super hard if I lose a bit of profit there. Okay, but again, the most important part is make your own research, make your own financial decisions. Don't blame things on others, because if you're doing this, you are basically saying that you are a person that putting your very hard work, money into someone else's opinion. I would never do that, and that's why make sure you make your own decisions and just use any YouTuber out there. Okay, just use all this information to make your own decisions. Okay, because those markets can be really, really, really volatile, specifically in those, let's say, the market doesn't go all the way up, and this is where the good investors will be spread from the bad investors. Okay, because the good investors know, okay, I made a lot of money, let's put some chips from the table, let's put some stop losses, so once we will have a questionable year next year, we still have a lot of profit, right, that we made over the next or last 2 years, for example, right? Or let's say there is a situation where you are just not aware about how the market works, like I just explained with the Fed and everything, then you will most probably lose everything that you made over the last 2 years. And those are then from the mindset, you will be so damaged from your ego that you will be so scared to invest in the future, And I think this will happen to many first-time stockholders. This will happen to many crypto holders that just know the bull market, right? There's not only the bull market, guys. There's also some correction, bear markets. There's financial recessions. Okay, this is to come. This is always the economical cycle. We don't know when. Okay, nobody knows when. And yeah, so it's important to really observe the market, what's really going on. Okay, now let's continue. Let's have a look. The market will close in 2 minutes. So let's have a look. If we towards the end of the market, you see here almost 2% in the S&P 500. Statistically, guys, only statistically, if the S&P 500 goes down 2% or more, the next day is 9 of 10 times is positive. So maybe we will have like a rebound tomorrow. I'm quite interested into that. So and let's have a look in some other things. Okay, so with that, there's 2 more components that in my personal opinion are very important to watch. Okay, now the 3 actually. Okay, first, we see the S&P 500 is almost at all-time highs. This is because Amazon, Apple, what else? Tesla, Microsoft, all of these big FANG stocks are carrying the S&P 500, while the small, companies are breaking down and already in a kind of correction style. So I really believe that you should look into those who are really holding the market, and this is what we will do. We will have a look into the technicals of these big guys, because if this fails, then we can have a really bigger correction of 5 or 10% into the market, in my personal opinion. So, but this is just like a intro. We will dive into that in more detail in a second. Another thing to watch, obviously, is the Treasury years, the 10-year. Okay, as you can see, it's not about just today's gain. It's about the whole months. Since the 20th of December, we really went higher. Okay, really went higher, which is not good for tech stocks. Okay, so this is a bad thing for tech stocks. So it could be that this cools a little bit down maybe tomorrow already. And the other factor that you should definitely look at too is the VIX. Okay, if there's really some bigger downturn coming, then it's basically also the VIX that is absolutely going up. So if this is continuing to go up, then it's better maybe if you're day trading, then maybe go out for the market, and then you can, and as a long-term investor, just be aware that it still can go further down and you can buy more for cheap if you're a long-term investor. Okay, because in the end of the day, it doesn't matter if you're in a recession, it doesn't matter if you're in a bear market, it doesn't matter if you are in a financial crisis. If you have a company that's doing very well, the stock will rise. It doesn't matter what the overall market does. Okay, so example, let's say Space or Virgin Galactic is continuing their business and they are growing and having their operation up and ready. Even when the market goes down, it can be that Virgin Galactic will be back at 60, at 50, or at 100 even, So, but that's more of a multi-year goal for you. So think about it in this way, that what is really happening onto the market, and actually think about it, what a great year we had into the space industry. Okay, we had the first private flight with Richard Branson. We had the first private flight with Jeff Bezos. We had the first civilians going up with Elon Musk, right? It is just so crazy what's happening there. And you want to tell me that you are afraid now because there was a little bit of a sell-off of Virgin Galactic? This should be your opportunity right now, okay? You will look back 5 years from now and say, wow, he made almost every day a video about this, and I still was scared to, I was really scared and went out of whatever, This happened to me already, okay? It happened to me already at Tesla. I went too out earlier. I didn't want to even mention it because it's so much money that I missed on because I was scared and went out of the. Even though I made, hundreds of percentage of profit, it still was, way too early because I was scared what's happening with the health crisis, I was still not that much involved in the stock market during the financial crisis. So, I was a little bit scared, and I said, before I lose all the profits, I don't know, this health crisis may be something that will take on a decade, right? So that was a little bit of a bummer for me. And since then I said, those really, really long-term projects, long-term companies, it's something that you buy and then forget for 10 years, okay? I was down with Tesla 60-70%, okay? And then still I was holding because I knew, okay, this is like a multi-year project, right? And then, the China factory happened, the overall, success of Elon Musk and the Model 3 happened, right? And the stock went 10x, okay? But you need to hold and understand why you bought the company, okay? This is so, so important, guys. There's another guy. So let us first go back to the first point. So the Treasury yield is something that you need to watch. And there's also 10-year, 10-year and 2-year CNBC spread, something like that. Here we go. So what is also important is this, okay? There is the 2 years and the 10 years yield, all right? What is important that it doesn't reverse. The problem is that as soon as this reverse, usually people are speaking about, a kind of really signs of, let's say, how to say it, a recession. Okay, so let's just have a look if we can find here. So, for example, 2000. Yeah, so you can see it more or less. So 2007, how far we went down and had an inversed yield curve. Also 2009, also here we had the inversed one. So, the thing is that it's always a good indicator to show that, bad times on the markets are coming. So this is also something that people are watching, okay? But that said, let's have a look what the S&P 500 big, let's say, companies are doing, okay? So, for example, Apple. Apple just lost 2.66%, but the most important is for Apple now to hold the other technicals, okay? Here, this is important. Apple cannot go lower than this one, okay? It shouldn't go lower. Let's remove the other one. Those are the most important ones. So it shouldn't go lower than 163, okay? Tesla should not go lower than 1069, all right? Let's say Facebook, okay? Facebook, for example, is already lower, okay? That's not good. Amazon as well, very bearish outlook now. We went below the 200 moving average. What about Microsoft? Microsoft also very important. Okay, Microsoft is still, we still have a little bit of room here until we reach the 200 mark. So as you can see, it's a little bit of a mixed bag, but as soon as, everything goes lower, then, then those moving average, and then we can imagine that the S&P 500 will go down, and then, the overall market could correct 5 to 10% more. And obviously, guys, when the interest rates are going higher, then obviously what you're seeing is that, companies like Tesla, Space, Google, all of this, tech companies, future revenue companies are getting really smashed. And however, so this is the, let's say, bad side. Let's talk about the good side as well, because as I said, there should be and can be a bounce back tomorrow. And usually if the stock market goes down for a couple of days, higher percentage of amount, then you usually have a better understanding the next days when it bounce back, if it bounce back. So there's also the statistical part, okay? The statistical part of the stock market in 2022 is very much nicely covered by Tom Lee and his team at Fundstrat. So let's have a look. It is of an interview of yesterday, but I think they will bring him to the show very, very soon again. And here's what he actually said yesterday, and you will see that the outcome looks quite nicely. So have a look.
Where should you be invested in the new year? We want to ask Fast Money friend Tom Lee. Tom is managing partner of Fundstrat and a CNBC contributor. Tom, great to have you back. 51,000 is your target. You think it may be conservative, and this is based on history stats that were pulled by your data guy at Fundstrat. What did you find?
Yes, our head of data science is tireless Ken, and he does work 24 hours. Maybe there's two of them. But what he looked at was two things. One is market performance after the S&P posts more than 27% gains, which is what happened last year. And the median return since 1938 is 16%. So that implies S&P 5600. And the second vector is midterm election years. And in years where the control is Democratic trifecta, which is what we have today, second half gains tend to be 16%. So I think we're in a year where we'll be constantly surprised by the market's resilient. The first half, I think, is quite tough, but I think that the full year is going to be very strong.
What does quite tough mean?
I think 2022 is probably the first year that the highest probability of a 10% correction. As you know, many kind of called for that last year, but we had pointed out that a drawdown that big wasn't historically supported. But I think this year there's a chance that we could rally to 55,000 in January and then pull back towards something pretty ugly by the summer. But I don't think that that's should be viewed as a top. I think it's just going to feel gut-wrenching.
Kind of agree with your outlook here, and 5100 from here is not a far cry, but if we do have that pretty sharp sell-off that you think comes at some point this year, then it's a good rally off the lows. Do you get concerned? You just heard our conversation about Apple at $3 trillion in market cap. Are some of these mega cap stocks becoming too big to fail? Are they too big of the components of the major indices here? And might we have a hiccup? Because there's been no hiccups in these names. And are they the ones that are going to lead us lower when we do have that correction?
Well, without question, S&P is becoming a tech index because the weight and the best companies in America are basically technology, healthcare, and banks. I mean, that's really the three big sectors of the S&P. We think FANG's going to be one of the outperformers in 2022 because the PE's derated last year. And so we think the chances of the FANG stocks, including Meta and Apple, having PE contraction is low. So they're going to track earnings growth. So I think FANG could be up 30% this year. And as you guys are using acronyms, I mean, our top three groups are, Bitcoin-related equities, energy stocks, and FANG, which is beef.
Tom, you're always willing to play, and we always appreciate that. Tom.
So as you can see, he talked about the one part that we talked about earlier, which was the S&P part, that is, a tech index. But also what he emphasized, that there will be a correction coming with all of this Fed policy things, and he thinks that it's this year, but he rather thinks it's a middle of the year thing. Okay, he thinks that we will rally the January. And there's another thing, guys. Once everybody cool down, okay, and it will be let's say, a little bit more clear that, you know, it's an old thing and it takes some time, the Fed can change its mind and everything, and everybody relax, then we will look back and we'll say, for example, let's say, people will say, wait a second, Tesla at $1,000 after this crazy good car report, I'm buying. Space, almost IPO price at 12, I'm buying. Okay? And then we should or could have the small hiccup that a rally actually needs. Okay, so for example, if we're going to the S&P 500 right now real quick, you will see that you know, we are still in the positive, and always we have obviously those small hiccups, then it goes further up, right? Small hiccup, further up. This is how the stock market works. Okay, it goes up, it goes a little bit down, up, down, up, down, up, down. Okay, here everything looks great until now. Here you see that those were this Omicron concerns that are basically done, because, you know, everybody got now corona, and, you know, everybody is now healthy and well, hopefully. So this is quite now interesting to watch, and I will stay with those 2 or 3 great analysts that saying, no, we think that it still have room to grow, even with this very bad surprise that catched us today by the Fed. It's something that I think that, you know, buying the dip today is something that you can do. Okay, this is what I'm doing. Okay, as you know, I'm putting every month's money, so I just put in some money. Unfortunately, I didn't have this discount, but yeah. The next time I buy is end of January, so I will buy obviously space. Okay, this is what I'm doing now. Let us have also a shout out to many people today. Thank you very much for tuning in. We have Sweden, Belgium, Czech Republic, we have Netherlands, our member Thomas, we have Chicago, we have Florida, Tampa, we have Vancouver, Braunschweig, Belgium, San Diego, Sweden, New York City, Paris, Chicago, we have Jacksonville, we have Berlin, we have guys, let me know where you guys are watching from. Okay, yeah, and some people saying fundamentally nothing had changed. Yeah, you know, those support, that those surprises by the Fed. You know, Fed has so much to do, guys, with the stock market. It can blow up the market, can blow up the equities, it can crash them. You know, it's really, really all about the Fed in this year. I think this will be number one. I said this many times before in some videos, and I believe that, you know, interest rates will be the number one reason why we see corrections and crashes over the years. Okay, so we have also people from Netherlands and Australia watching the show, so thank you very much. Leave a like, and don't forget to follow me on Instagram if you want to have more. Just beware, sometimes when you follow me on Instagram, there's some fake profiles. They follow you, they send you messages, they will ask for money. I would never do that. Okay, so thank you very much for watching. Smash that like button, and I will leave you with Elon Musk dancing a little bit for you.